Well, good day, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up for the 23rd of March, 2023. All right. You've all been lied to, and you have been hidden the truth from you. President Biden said at the end of last year that the U.S. was going to buy back oil, ideally under $70 a barrel, and he's instructed his team to do so. So today, our energy secretary, now that oil has been down, and I'm sure my videos have gotten some viewership, I've been saying, what a great trade. I mean, I don't know another president to make that trade. You've heard me say it. Well, to make a long story short, there is no trade. What if I tell you that she comes out, Miss Granholm, Jennifer Granholm, and she says that the U.S. is not in a position to buy any oil. In fact, we are selling the oil out of the strategic reserve. We're working on that right now. And there's so much maintenance going on two of our reserves that we have nowhere to put it should we decide to buy it. The President of the United States is telling all of us they're buying back the oil. His job's to tell us in some manner we're not. So he has her. That story did not appear in Bloomberg. That story was not in Reuters. I was looking. I've been looking every day for just a piece of news. How are we doing with this? And it was important as a trader because I'm saying there's the natural support in the market. I'm counting on what I've been told by the leader of the country. Well, as it turns out, he's a leader of, I don't know what kind of pack, but it isn't what he thinks. So you can forget the idea, if Ms. Granholm knows what she's talking about, that we are buying any oil this year. It's highly doubtful. That's her words, highly doubtful. Wall Street Journal. You don't have to believe them. Go find the story, okay? Put her name in there, Jennifer Granholm, Energy Secretary, News of the Day. I read it. You'll be able to read it. Okay, so I got to get that aggravation off my chest. What will happen is if Joe's got another term in him, he'll buy the oil back at $100 a barrel. Okay. So the other battle that is going on is now we've all had a chance to digest a few things. We saw our work yesterday. We know that we keep hearing that the banks are okay. Well, number one, the stock market does not think the banks are okay. If you take a look at First Republic, PacWest, there's four banks that are under assault. I don't understand Charles Schwab getting beaten up here because they could afford to lose deposits left and right. They're probably taking in money hand over fist into the money market accounts and everything else. They're a simply great brokerage company, one of the best there is, and I doubt that there's any problem. But if you're associated with deposits, it's just like a high tide raises all ships. Well, low tide takes them all down. That's pretty much what you have going on. I, for one, think that First Republic is going poof. I'd like to be wrong. I don't want to see any bank fail. I have nothing to gain from it. But that's what I believe because the market's not getting the bounce and I'm not hearing the support coming out of anywhere as to how it's going to come about to change that. Number three in the hit parade, or two. You saw today the Swiss National Bank, the Bank of England, and even Peru joined in, and everybody raised their key rates one more time. And the Bank of England, as much as people want to say that they're not going to keep going, I heard the bank governor, and he said, we will go to wherever we have to go to beat it. We hope that our inflationary pressures drop, or we don't have to keep doing this. Well, we'll see. They are doing fine with seeing inflation pressures drop. I know there was a bleep in food and beverage, and that threw the numbers off, but what the heck? The Brits are good drinking people. I love going there. Favorite people, good group. All right, First Republic, coming down. I see all that through here. And, you know, I do realize, and there's something to pay attention. Notice the size of the ranges are getting smaller and smaller again. I don't know if that's that it's running out of sellers, even though it's dropping, because it's not getting as volatile. That's a chance that is going on. So I'm always nervous about that. But when I come to the rest of my work, lower highs, lower lows, the market's under all the key moving averages. Obviously, it's not going to the lower Bollinger Band. I've explained that to you. Markets on a stock can't go to below zero. They're just not worth anything below zero. They're worthless at that point. But the Bollinger Bands don't know that. So they'll put in these values. The point is it's far away and you have an embedded reading. So yes, you can get rallies, but until the red line closes over 21, I say the pressure stays on the market and I'm looking for lower prices. Schwab today down nearly 6%. Lower highs, lower lows, momentum down. You got to keep your eye on this one in a big way. You don't want to see it back over that high. That would be a warning sign that maybe the market's overdone it. But until it's overdone, it's not overdone. And it is not oversold. You can see that. It's knocking on the door, 30.5. Anything under 30 is oversold. So we'll see if it gets any momentum with it. In the gasoline, this is what I wanted to see. I think we're at the point where the market is starting to price in the spring, summer markets. We had the washout here that went down and was right in the ballpark of this one. We've been in basic sideways action. We widened out a little bit, and now we have rallied back up to the 18-day average very nicely, and I think you're going to fight a little bit of a battle here, but I think that in another month, I think you'll have been somewhere else in price. I'm hoping a lot higher. In Tesla, market backing off. Now, Tesla's creating more of a price war in China. I was reading an article today that they're lowering prices. Have you looked at the price of lithium? Lithium, copper, any of these different metals that are used in building these cars, they are down sharply. You would think that with more cars being built, electric cars I am talking about, and they are, there's more of them being built, Ford, GM, that's from us, Renault. I can go on and on, all the different manufacturers that are either in it, they partnered with somebody, that lithium prices would be going up. They're not. They're going down, just the opposite of everything. And if they go down, it allows who to make more money? The big boy. The guy that makes profit on cars, not the guy that loses. And right now, if you saw Ford and how much money they talk they're going to lose because of their electric cars, you know, what is it, $2-3 billion at a time? They're making money on their other stuff so they can absorb it as they ratchet in. And that's how you have to do it. But yes, it's a losing proposition at the beginning. You're fully embedded in the financial services. I was listening to people saying on TV, it's the time to go into financial services. And I'm going to myself, why? The eye of the tiger? That's what you want to take on? You have an embedded reading. Please learn embedded readings. Embedded readings are saying on rallies until the red line's over 21, you are looking to sell the market with goals of trying to get towards wherever that next Bollinger Band. And there is a window envelope number that I always pay attention. There's two numbers that could offer support. XLI is very oversold. We've had a bear market rally that has suddenly stalled, and you're getting a bearish crossover. The 18-day average just got under the 100. Should add some bear fire to this. In stocks, the powerhouse have been the chips. The chips are on fire. There's no question about it. Even the bad ones got good bids today. I was watching it across the board going, boy, the market likes what it's seeing there. So that is a good sign for the chip market. In the home builders, they are making money again. And I think they'll continue to make money, but they're not out of the woods. This is not bullish yet. This is the end of a bear play, but you need to close over the red line to get bullish. When that occurs, I will tell you that I have joined the bull camp. I'm not in the bear camp. As a chartist, I'm out of the bear, but not in the bull yet. Energy sector. Joe, you're killing me. So now what's negative on energy, and you got to think it through, is the U.S. isn't going to be there to take in these millions of barrels and put them back into storage. When, I don't know, but if you read the article, it was pretty clear. She doesn't think it's 2023. Well, now I don't know what to expect, because if the world goes into a mild recession and comes out of it, oil prices will be on fire before you come out of that recession. Remember, futures markets and commodities anticipate and make moves. Very important. In the gold market, well, this has proven itself to be the area that people want to be in. I know it doesn't pay interest, but it's been proving itself that it's doing its job of holding value. And let me tell you why it's got a bid. People are scared that the other shoe in the stock market's going to drop. Nobody knows how low the market might go. All you keep hearing about is if we get a recession, it'll be mild in scope because of labor, but the market is overvalued at 18 and a half times earnings on some of these things, and that gold is the place to be. I heard today more analysts talking about it that way than I could shake a stick at. And what's happening here is you have your embedded readings. Now, if you don't understand embedded readings, shame on you. But for me, this tells me that if I'm going to take a shot in the market and take risk, and if I lose, I lose, I do it ideally when you have an embedded reading and you have it. Is there a way to come in? Yeah, but I'm not going to tell it to you here. It's in the course, and I'll talk about that right after this. In the silver market, if you've watched my futures, I've been pointing out that silver had crisscrossed about three to 5 days ago, a key moving average, and it should be stronger than gold, and it is most certainly on the chart running beautifully against the gold. In the copper, you're up to a key resistance point. The 100-day and the 18-day average, you're out of your bear trend. You now have a higher high and low, but you haven't yet entered the bullish camp. I think the market's waiting on China. But I like what I'm seeing out of China. I think the numbers are going to be much better going forward. I think that we're through with the COVID, the lunar holidays over there. I think they're back to work doing whatever they're doing. And I think we're going to be surprised at how things go. In TLT, well, I'm friendly. Why am I friendly? Because I don't think that 20-year, 30-year bonds are going back to these levels again. I think we have bottomed out in that, or topped out in real rates is the way to say it. And on these markets, I'm an interested buyer. But do I want to buy against the 200-day average, the first attack? I'll share this bit of wisdom. No. I'll wait my turn. In UUP, well, the dollar's been bearish, but I don't press the Bollinger Band when you're not embedded. And on the FXE, you're overbought, you're at the Bollinger Band, I don't press it. But I want to ultimately be long FXE and short the dollar. The question is how to do it. If they embed, we can come into that. So how do you work with embedded readings in the slow stochastic? Please watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.